months?
Well, it depends. It's very hard to look into their minds. Of course, there's a time frame. She can play it either way. He can comply a little bit to get the deal done, because I still think that President Trump wants a deal done before the elections. But he can also wait for the next president. Maybe that's going to be Donald Trump once again, or maybe somebody else, and that would make life easier for them. I think China very often plays the long game, so I think they will not be bullied in something very easily.
That's exactly what the guest of the previous hour, a Chinese economist, said to us. They'll probably wait it out a little bit. Yes, they're under pressure domestically because obviously the country, the people are feeling the heat economically, but they want to save their faces. That's what the government wants to do. So basically, what does it mean for the markets and what does it mean for investors? We're simply going to have to wait this out too. There's going to be a lot of volatility and tweet watching for the next couple of months.
Yeah, I'm very much afraid. Last week we wanted two things. We wanted the Fed to be quite dovish. They were not as dovish as the market wanted. We wanted to go the trade war in the right direction. It's not gone in the right direction. So I think we're up for a very volatile summer, unfortunately.
And we can't ignore the timing of President Trump's move here. It came on Thursday, just a day after the Federal Reserve's move to cut rates, but do so in a hawkish way. And of course, we all know that President Trump has been really laying on the pressure for Jerome Powell. I mean, he chose to go ahead with 10% tariffs. That's not as severe as we've seen in the past. So arguably, he tried to argue it was a small adjustment, a small additional set of tariffs. But strategically, who do you think he had in mind in terms of who's he trying to pressure more? Is it the Federal Reserve or is it actually China?
Well, maybe both. He wants two things. He wants a trade deal done before the elections, and he wants lower rates. But it's very difficult to have both of them, because the day he strikes a deal, you will not have the lower rates. So if you look at it in a very Machiavellistic way, you probably can pressure China a bit, pressure the world economy, pressure Jerome Powell to lower interest rates, and then strike the deal. Of course, that's a lot of ifs, and he all has to do it at least 3 to 6 months before the elections, otherwise it will not have an impact. So he's playing a very hard game, but I think there's a certain logic to that.
Now, on Friday, we heard from China that they were prepared to retaliate. They were going to ignite some countermeasures. Now we've seen the yuan weaken. It's crossed that 7 mark today. In terms of what would escalate the trade war most significantly, what kind of countermeasures do you think that China is looking at, and what would the market take most badly in terms of what they could do to try to retaliate themselves?
Well, if you see at the opening today, the yuan, they don't take very good at the moment. You have the yuan at levels sitting there since 2008, 2009. You see very big moves everywhere. You see gold 6-year highs, you see oil going down 7-8%. So I guess we're in a new regime where you will see a lot of volatility. And I think this trade war, or we would rather call it technology war, is slowly but certainly moving into a currency war. And I think eventually the European Union will also get involved into that, because the euro is also quite strong. We've heard Donald Trump talking about the automobile sector as well. So now we're a little bit out of the line of fire because everybody's focusing on China, but I still think Europe will also be involved. So it will be a very, very complicated environment.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.